people always say that like silver and gold aren't going up, your dollar's going down in value, and there's truth to that. There's truth to the fact that not all of silver and gold's price gains are buying power increases, but there's also truth to the fact that the actual buying power is going up too. If you go to there's a website, and I'll link it in the description. It's I think it's called like priceandgold.com or something like that, or it might be Long Term Trends, something, one of those two. It might be two different websites. I'll look for them. You can see that the price of goods in gold and silver have gone down also. So your gold and silver is buying you more of stuff. It's not just buying you more dollars. It's actually buying you more other commodities, buying you more house, more land, more wheat. More ribeyes. All that shit. So it's really not just your dollar going down, even though that is a part of the equation. Inflation's happening fast. It's not happening as fast as gold and silver are going up. So you really are, people say gold and silver aren't an investment, and I guess I don't really understand the term, what the definition of investment really is. So it's hard for me to argue one way or another. But I will say your buying power in gold and silver is going up. So, call it an investment or not, it's something I like to have in my possession and it's part of my portfolio. Yeah, guys, stack heavy and try to stack for as low as premiums you can. Monument Metals runs a lot of good deals, the low premium, but always check the premiums. Never blindly trust. I see a butterfly drinking from my lantana. Never blindly trust the prices, even if they say X amount over spot. I've caught Monument Metals putting the wrong numbers up for their premiums. Monument Metals used to actually say the premium in the description for every one of their items, and I love that. That was really convenient. But even then, you got to check. But pretty much no bullion dealers do that, except for like a couple items. Certain items they'll display the price if they have a really competitive number on there. But a lot of times they don't. Shop around your local coin dealers for sure. I've gotten a lot of really good deals from local coin dealers, and I've also had to pay like 20%, and that really pissed me off. I didn't have to pay it. I should have said no, but I've paid 20%, and I've still made money on that. I've made a lot of money on that coin I paid 20% on, but I would have made more money if I'd paid a reasonable percentage, like 10 at the max. 10 is really the upper limit of what I'm willing to pay. I used to pay like 8% on my silver coins, and that was even a little high. Now I really, really like to pay like 5 and below percentage. And actually, I tried calling some silver dealers today or this week, and this one silver was like 30 or 53, 54. So I understand them wanting to offer a little below. What's gonna happen is, the higher that the gold and silver price goes, naturally, especially as it's a fresh price, right? So as it freshly pushes to new highs, gold and silver dealers are going to lag a little bit sometimes especially on their buy price, right? They're going to lag a little bit on their buy price because they're not comfortable taking that risk of, or they're not comfortable taking that jump of paying all-time high prices, especially when they're so new and fresh. And this is going to change over time, and this doesn't apply to all dealers. Some dealers might be willing to take that risk, some might not. It just depends on each dealer and kind of how much people are selling to them, how much people are buying to them, and what their acquisition costs are, right? So if they can acquire gold for 2% under spot from a dealer, or that's what people are willing to sell to them, that's probably what they're going to pay. or maybe even a little below that. And if they can only get it for as cheap a spot, okay, then they might be willing to give you 1% under spot, or they might even be able to buy it from you for spot. And on the flip side of that, actually, as prices rise to new highs, a lot of times you can get good deals, right? So Monument Metals will put up solid deals on, or other, I use Monument Metals a lot, so I talk about them a lot, but, or other coin dealers will put up great deals. Like when silver had made the run up to 42, I was able, well, actually, even when it was 38, I was able to buy constitutional silver dimes at spot. So I was able to buy them at spot. And that turned out being a great deal because now we're at 50 or 49. I haven't checked it today. We're around in the 50s range. And Monument Metals, actually, when silver ran up to 42, they were selling dimes and quarters at 50% under spot. And I bought a stack of quarters and a stack of dimes at that price, I'm pretty sure. So, I mean, that was a great deal. Now, the thing you do have to watch out for, and I got burned with, not burned, but slightly burned with, I bought some more nickels when silver was like 32. And they were advertised as being under spot, and they were under spot on paper, but they were actually underweight, right, from just circulation wear. And that's the thing when you're buying face value, you're not buying weight, so you can get slightly shortchanged on being a few percentage points underweight. And I think the ones I got were like either 5 or 7% underweight on average. So I ended up kind of breaking even on spot, right? So they said they were under spot. And with the weight loss, I think it was like slightly above spot. And I've made a ton of money on them, so I really, it's fine. It's whatever. And, I'm happy with them. It's a cool, they're neat because they're, a World War II relic, and they were made for such a short period of time, just a few years. Now, the issue with that is that since they're only 35% silver, they are less attractive to refiners. So I think refiners, it takes a little more work to refine from 35% to 999 than from 90% to 999. And even 90%, I think, is getting a significant discount when selling to refiners, especially recently, it seems. In fact, I haven't heard for a while that refiners stopped taking 90%. And, that's not my use case. I'm not worried about that because I have mostly 999 anyways. So that doesn't really concern me. Although if my whole stack was 999, if my whole stack was 90% or 35%, yeah, that would be a little more concerning. But I like the 90% because, it's really fractional. Instead of having to sell a whole ounce, I could sell a dime, which would, be like $7 or something worth. So, if I wanted to buy a sandwich, I could spend a dime instead of and spend $7 instead of spending $50. So that's really attractive to me. What's kind of interesting though is so recently I called up Monument Metals, and this is when silver was 52, so it was slightly higher. And they offered me $2 under spot, is what they said, for my generics, or quote unquote generics, right? My 1.5 coins. And what was also interesting is that the spot price they quoted me was about $1 under the spot price they had listed on their website. And I understand there's a difference between the bid and the ask, right? And I don't totally understand that, but I understand at least there is some gap there. So having a different spot price is somewhat reasonable to that, but, not to the tune of $1. In silver, that'd be maybe 10 cents or something. I'm not exactly sure, but
I asked him about that, and I said, okay, so why is the spot price you're giving me now different from the one you have listed on your website and the one that's on Kitco? And, she said that, yeah, the bid, and I asked, is the bid and the ask price? And she said, well, the bid and the ask price should only be a couple on silver. It's a little larger on gold, just because it's a more expensive commodity. And, and then she kind of gave me the usual spiel that dealers will give when you ask about a price being too high, or just a discrepancy in price, saying, "Oh, we got to make money. We got to, yada yada yada." Which I understand you got to make money. I'm not complaining about that. I'm just looking for transparency in price and a reasonable price. And it kind of annoys me when I get that spiel. I mean, I get it. They're a little defensive sometimes about prices. Dealers can tend to be. I've had dealers, especially local coin shops, get a little defensive with me. When I'm questioning about price or asking if we can do a different price. And hey, it's their right. They're never aggressive or cross the line or anything. Just a little defensive. Which, is annoying, but that's fine. And the local coin shops I called that same day were like $3 in their spot for the 1.5 and $1 in their spot for like an American Eagle, Silver Eagle, which was pretty reasonable because silver was close to its all-time high nominally. I mean, if you inflation adjusted, it's nowhere near. We've gotten to 52 in I think like 2012 and 20 and the 1980, which should be like with the Hunt Brothers. And I want to do an episode on the Hunt Brothers too. That they fascinate me. Which now is like $200 plus inflation adjusted. And we look at this recent run up in gold and silver, and it does seem explosive. It does seem abnormal, which is kind of what makes the pullback reasonable. And I think we're just going to see a period of higher volatility in the silver and gold market. Really, so that the pullback doesn't surprise me. And in my opinion, it's really just playing catch up. We've had silver go and gold go kind of flatline for a long time. And especially silver, right? I mean, gold had some big run-ups and silver stayed pretty low. And in fact, the gold and silver ratio went up to 100. And then now it's pulling back to 80. And when I've watched the gold and silver ratio, it just reeks of manipulation. And, hey, JP Morgan's been charged $200 million for manipulation. And other banks, too. I mean, they're just one of many who does it. And on an interesting note, actually, Jamie Dimon, the CEO of JP Morgan, recently said that he sees gold going to 5,000 very soon. Which, I mean, hey, that's interesting take. I wouldn't argue. But yeah, the kind of the way I see it is that a lot of times I think the ratio is used to hide the increase in silver value, right? So, or overshadow it with gold. So you have gold make a big rise, and then they let silver play catch up halfway, right? Or in this latest case, we had gold and silver rise together with the ratio kind of holding around 80, and then now, as we had the run up to 52 gold and 4,300 4,300 gold and 52 silver. And then now we've kind of had them both pull back, but we had silver pull back more, right? And now the ratio is like 84. So we went from like 80 to 84, which is only a slight increase, but when they're both decreasing and then you have silver decreasing more, it just really feels like they almost let gold run up more to kind of overshadow silver, and then allow them to have the breathing room to pull back silver more. Just my personal opinion. Not financial advice, of course. And you look at the historical ratio, and it's the average is like somewhere in the 60s or 50s. And if you go back far enough, it was pretty steady around 15 for a long time, gold to silver ratio. And I haven't checked these numbers in a while, but if I'm correct, I think the abundance of the earth of gold to silver is like 18 to 1 maybe, and then the amount it's mined out the ground is like 8 to 1, right? So for every 1 ounce of gold, there's 8 ounces of silver that's mined out of the ground. I'll need to check those numbers again, but it's somewhere around there. And the naturally occurring amount is, I think, around like 18 to 1 or somewhere around there. For every 1 ounce of gold in the earth, there's like 18 ounces of silver. So, I mean, still, silver is less scarce than gold, but it's not nearly as much of a difference as the ratio we have today. The ratio we have today seems quite unnatural. And, especially when we hit like 100 to 1, that was buy for me. And anything over 90 to 1, gold to silver, to me, is definitely a buy signal for silver over gold. I mean, hey, they could both be overvalued, I guess. I doubt it, but it's possible. And then, now that we're at 80, it's a little more of a toss-up, although I still think silver is probably the better buy. At the 80 to 1 ratio, I think the ratio is still way too high. Yeah, so I mean, this latest run-up seems out of character. But what I really think is out of character is the fact that we've been stagnant for so long, and sitting at $25, $30 silver for such a long time, when we'd made run-ups to 50 before, and especially for silver. I mean, for gold too. I mean, gold seemed undervalued, but silver really seemed undervalued, right? Where gold had been rising kind of steadily and was at all-time highs for a good while. Nominally, of course, inflation adjusted, no. And silver was sitting way below its all-time high nominally, priced in USD. Just a few years ago when I started buying, it was $25 an ounce, and in the 80s it was 50 plus. So it just doesn't seem right at all. In the 1980s, being almost over double the price it was just a couple years ago, that didn't seem right. So even though this recent run-up does seem fast and aggressive, I mean, it seems like it's a long time coming, and really, especially with the silver shortage, there's more being used industrially than's being pulled out of the ground. We've had a silver shortage for years now, or more silver being used than's being produced. So, there's a lot of reasons it seems like this latest run-up's only natural, even though I think it's still a heavily manipulated market. They had to let it go at some point. So, yeah, I mean, and you look at the price of, we're kind of catching up to inflation, but at the same time, it seems like our buying power is getting a lot stronger with gold and silver, and I think it will continue to do so, continue to beat inflation. And I was watching a Maneko 64 video. It's a YouTube channel I like to watch, and he was talking about kind of how all kind of fiat currencies recently are really starting to show their weakness, especially the Japanese yen. And if you do the yen priced in gold, I mean, it's just a abysmal drop off. And it's buying power of gold. If you compare it to other fiat currencies, you could say, oh, you're having a stronger yen or a weaker yen. It kind of is tough to read. But then if you price it in real commodities like gold, it becomes pretty obvious that, what's going on here. Yep, well, thanks for listening in. This has been Gold in the Garden, and I'll catch you guys in the next one. one more note. I mean, and I elaborated on this a little earlier, but dealers are going to pay. They're going to pay what they can, as low as they can get, and they're going to sell it for as high as they can get. Now, a lot of times that's pretty reasonable, and maybe I'm oversimplifying it. There's probably some dealers out there, that try to give really good deals to keep customers, and I've encountered that a lot with people like Monument Metals or bullion exchanges or my local coin dealers will give me stuff at spot, and I haven't sold much. I've only recently started getting quotes on selling, to dealers. I've sold, to friends a little bit, but not to dealers. But yeah, I mean, like on the, they're just going to try to get what they can get. And if a lot of people are rushing in there and selling at a low price, they're going to take advantage of that. So, and what the prices they can get are always changing. So, in an evolving market where prices are jumping up really high, there might be a little bit of a lag, but I think it'll quickly correct, right? I think people are adjusting these new prices, as we hit new highs. Probably some people are coming in and selling, but then I think a lot more people are coming in and buying too, because they're triggered by the new price rises. And I'd be a little wary on that, right? Don't chase climbing prices, right? You want to chase falling prices. Now, that's not to say even at a all-time high, gold and silver might still be a great buy. But, ideally that's not where you typically want to be buying. I mean, typically, you want a dollar cost average in as it's dropping, right? So, as it goes from 54 in silver to 50 to 49, okay, it's starting to seem like a little bit better of a buy, right? Or when earlier, maybe about a year ago, when it was going from like 34 to 32 to 30 to 28, that was like, okay, that's a really good time to buy. And I invested some then because I saw it dropping, and the more it dropped, the more I was trying to buy. So that's a little word of advice. I won't say it's a bad time to buy now. Well, it's better than it was, a week ago when silver was at 54. But, it might not be the best time in the world to buy. But at the same time, the dollar's not getting any stronger. And I think the bullish case overall for silver is still really good. So, I mean, I would definitely wouldn't say not to buy. But, just in general, there's a tendency to get de-interested in a commodity when it's dropping in price and more interested in it when it's rising in price. And that's kind of, for some people, maybe not everyone. And that's kind of the opposite of what you really want to be doing, right? You don't want to be buying when it's making, or at least when it's well into making big rises. Maybe when it starts making big rises, that might be a good time to buy, right? Like when it went from 32 or 34 to 38, okay, it was a great time to buy. And actually I was buying like mad then, because I had a feeling like, okay, it's making big rises, but I still think there's a lot of room to grow. When I went up to 42, I was still buying. I was buying less, but I was still buying. And then, now that it's hit 48, 49, I slowed down a decent amount. I mean, if I had a pile of cash sitting around, I'd still invest, a good portion of that into silver and gold. But I wouldn't go maybe all in like I would in the past. So yeah, it's just something to consider. That, the buying conditions and then premiums you're going to get on the buying and selling side with dealers and individuals are always changing. The amount of people that the price that dealers can get on the buy and sell side is always changing. And, generally I wouldn't pay more than 10% premium. And really my target is at least under 5. That's really where I like to be these days. I started off my target kind of being under 10. And then it's moved down to 5 when I realized, okay, when you shop, you can shop around. You don't have to take the first offer you get. You don't have to buy at the first coin shop you go into or the first online retailer you go into. There's lots of people around, and probably different ones that have different buying and selling conditions, a different amount of people coming in and buying and selling. And some of them can get better deals and are offering better deals and are probably more fairly priced. I mean, it's just there's a lot of different options out there. So don't feel like you have to go in and pay 20% premium or even pay 10% premium when you can shop around. At least in this market, especially when we're such close to, such high prices. And I know less about the selling side, and as I learn more about the selling side of things, I'll be sure to tell you guys what I know. But yeah, I'm kind of a premium hunter, and I really try to stack weight over numismatics at this point in the game. And I like historical gold, and I've been able to get gold from the 1800s and early 1900s at spot or very close to spot, which has made me really happy. And I'd like to expand into more numismatics, older numismatics that are above spot, but I have a harder time understanding what's a good deal, right? If I'm buying a coin from the 1300s, okay, it's going to be way over spot, of course. But, what's reasonable there? Is it 40% over spot? Is it 60% over spot? I mean, what's a reasonable deal for a numismatic coin from that era? I'm not sure. So I haven't really gotten into those waters yet. And, hopefully one day I'll get there. But for now, I'm focused on, applying kind of my premium hunter skills to finding, or going for really low premium coins. But then I've shifted to low premium coins from the 1800s, getting a Napoleon III or a Belgian 1877 20 franc, or just stuff like that I think is cool and has some history and is still from a bygone era, but I can get it for the value in metals content, because I know I have solid faith in that's a good investment. So yeah, just a couple more tips on how to get a good price from your dealer and what to expect in these changing times. It's definitely an interesting environment to be buying and selling in with all these rapid changes, and I like I said, I think these changes are kind of maybe long overdue, and the way they're happening does seem like it's being heavily manipulated. Maybe a kind of a controlled pressure let off. So, but even being heavily manipulated, you can still make a lot of money. Yeah, it's interesting. All right, guys, have a good one.